They're supposed to be boring, predictable, pegged to the dollar. But don't be fooled, stablecoins are in the middle of a high-stakes battle that could reshape crypto and global finance. Welcome to Black Book Crypto, where we cut through the noise and get to the truth. Today, we're diving into the stablecoin wars, USDC versus USDT, and what comes next. Let's go. First, what exactly is a stablecoin? In simple terms, it's a cryptocurrency pegged to a stable asset, usually the US dollar. Why does it matter? Because stablecoins are the glue that holds the crypto ecosystem together. They're used for trading, lending, remittances, DeFi protocols, and cross-border payments. Without stablecoins, crypto would be a lot more volatile, and a lot less usable. But here's the kicker, not all stablecoins are created equal, and that's where the war begins. Before we get into it, a word from our sponsor. This video is sponsored by Solana Payouts, a smart, high-performance crypto income platform riding on the speed and efficiency of the Solana network. Since January 2024, they've delivered a 459.2% compounded return, or 184.9% non-compounded, without the usual hype or drama. Solana Payouts is built for investors who want real performance with serious upside potential. Check them out using the link in the description below and explore what your crypto could really be doing for you. Let's start with USDT, aka Tether, the OG and still the largest stablecoin in the world. As of this video, USDT's market cap is over $110 billion, commanding more than 65% of the entire stablecoin market. Tether is fast, liquid, and widely accepted on every major exchange. But it's not without controversy. For years, critics have questioned Tether's reserves. How much of that $110 billion is really backed one-to-one with real assets? They've been fined, subpoenaed, and forced to disclose audits, kind of. Today, they claim to hold most of their reserves in short-term US Treasuries, making USDT technically very robust. But there's still a cloud of mistrust. Tether is registered in the BVI, not the US, and its audits are less transparent than its biggest competitor, USDC. USDC is the challenger that plays by the rules, or at least, wants to. It's issued by Circle, a US-based fintech firm that's heavily regulated and well integrated into the banking system. USDC is fully backed by cash and short-term treasuries, with monthly attestations from a top US accounting firm. Coinbase, one of Circle's key partners, even uses USDC as its default dollar balance. So what's the catch? Adoption. USDC's market cap is less than half of USDT's and it's struggled to regain dominance after losing billions in the 2023 regional bank crisis, when Circle had reserves tied up in Silicon Valley Bank. Since then, trust has largely recovered, but the gap remains. USDC may be more transparent, but USDT is still more widely used. But here's where things get interesting. The stablecoin wars aren't just between USDC and USDT anymore. We're seeing new contenders enter the arena, and the lines between crypto and traditional finance are starting to blur. CBDCs, central bank digital currencies like the digital euro and China's ECNY are already being piloted. These won't be trustless or decentralized, but they'll compete with stablecoins for payments, especially cross-border. PayPal's PYUSD, a fully regulated stablecoin launched by a payments giant. Early adoption is low, but it signals that mainstream finance wants in. DeFi native options, coins like CRVUSD, RAI, and GHO are trying to create more decentralized and permissionless alternatives to fiat-backed stablecoins. Then there's tokenized real-world assets, like on-chain treasuries that are blurring the line even further. So the big question, which stablecoin should you trust? Well, it depends on your goals. If you want speed and liquidity for global trading, USDT is still king. If you prioritize transparency, regulation, and US compliance, USDC is the safer bet. If you're a DeFi maximalist, you might prefer alternatives like DAI or GHO that don't rely on central banks. The point is, this space is evolving fast, and the winner may not even be here yet. Watch the regulators, watch the banks, and most of all, watch where the capital flows. Stablecoins may be pegged, but the battle for dominance is anything but stable. And if you want to stay ahead of where it's going, you're in the right place. Subscribe to Black Book Crypto for in-depth breakdowns on the forces shaping the financial future. Hit the bell. Visit blackbookcrypto.com for even more crypto intel, tools, and strategy.